This is John Cartwright, professional trader with the $1 Million Margin Club. You might know us for our best-selling day trading books and powerful study guides. Did you know there are over 8 million day traders in the world today? Yet less than 5% find consistent success? What separates the professionals from the rest isn't luck. It's the tools they trust. In this video, we're breaking down the top 5 indicators traders rely on. The ones that shape every decision, protect every dollar, and create every opportunity. And now, it's my pleasure to introduce Jordan Wells, who's here to help guide you toward a smarter, more profitable future.
Thank you, John. Here at the $1 Million Margin Club, we're not just professional traders, we're obsessed with uncovering every new strategy and breakthrough in day trading. From deep dive book reviews to powerful indicators and real candlestick pattern challenges, this channel is your edge in the market. I'm Jordan Wells, and now, to guide you through the top 5 Thinkorswim most captivating, game-changing indicators used by traders around the world, I'm honored to introduce Mr. Experience himself, Nigel Ashcroft, as he breaks down the first of our studies, voted number 1 by professional traders.
The Scalping Indicator with EMA VWAP crossover is a visual tool designed to help traders spot momentum and volume shifts instantly. This custom-designed indicator displays instant information that tracks buying and selling volume and momentum as it occurs, allowing traders to take advantage of short-term price movements as they happen. In addition, the longer-term crossover between the 14 EMA and the VWAP help the trader see longer trends. As we break down these dynamic labels, we will see on the left that a green or red label illuminates when the 14 EMA crosses above or below the VWAP, giving the trader a perspective of a longer trend. The yellow labels show the volume of the current and last candle to close, and may notify the trader of a possible shift in interest as the volume increases or decreases with price. This can help them make informed decisions quickly. The red and green labels take you inside the candle and show the real-time percentage of buyers and sellers, which allows them to make fast and informed decisions on their entry and exits of trades as the buyers and sellers battle for dominance. These groundbreaking features, along with the blue histogram at the bottom of the chart, gives a clean view of total volume and price sentiment in the moment. As we look inside the volume bars, you can follow the green dots connected by a line dynamically show where buying strength is occurring within each candle. Red dots and connective lines do the same for seller activity, giving a real-time visual of where selling pressure is taking place. For these reasons, the scalping indicator has become the favorite tool of traders looking to capitalize quickly on short-term price movements. Here is how the various parts of this indicator work. When the 14 EMA crosses above the VWAP, it often signals bullish intent. When it crosses below, it can suggest selling momentum. In the histogram, each bar's volume is split based on price position. If the close of the candle's price is near the high, buyers were stronger. If it's near the low, sellers were stronger. We then calculate the percentage of volume attributed to the buyers versus the sellers, giving you a precise read on who's dominating the price movement in each candle. The scalping indicator with EMA VWAP crossover gives you clear crossover signals, volume confirmation, and real-time buyer-seller insight, all in one streamlined display to help you make informed decisions quickly.
After seeing just how powerful the scalping indicator really is, it's easy to understand why so many professional traders rely on it. They often describe using it like catching the perfect wave. You wait patiently, reading the momentum as it builds, and then when the move starts to form, you jump in and ride it with precision. This indicator doesn't just show where the action is, it helps you time your entry and exit with accuracy. You're not guessing, you're gliding, riding short-term trends just long enough to capture profits, then stepping off before the wave crashes. For scalpers, that kind of control is everything. And speaking of control, let's see what Nigel has in store for us next, as he breaks down another game-changing tool used by professional traders around the world.
The multiple time alignment indicator delivers a powerful visual snapshot of short-term market momentum by bringing together multiple key time frames into a single cohesive tool. It helps to confirm directional strength across a range of intraday perspectives. At a glance, this row of color-coded labels presents the 5 most commonly watched intraday time frames. A 5-minute label stands in contrast to the 15-minute, 30-minute, 1-hour and 4-hour charts, revealing where short-term weakness may diverge from the broader trend. The 5-minute label is represented by 5 individual 1-minute candles on the chart. Here, short-term price action is building the current 5-minute formation, giving insight into consolidation or reversals within the 5-minute range. Both the red label and the red vertical lines confirm the price is closing lower than it opened within this time frame. The view of the 1-minute candles confirms consolidation, showing indecision or pressure that may result in a strong price movement. Meanwhile, the remaining time frames, 15-minute, 30-minute, 1-hour and 4-hour, all show bullish momentum. These upward trends are aligned across broader segments of market activity, reinforcing directional conviction even as the shorter-term view pauses or pulls back. The formulas for this indicator start with a simple but essential condition, comparing the closing price to the opening price for the candle. If the close is higher than the open, the result is considered bullish. The variable is 5-minute green, captures this logic for the 5-minute candle. This same test repeats across the 15-minute, 30-minute, 1-hour and 4-hour time frames, creating a synchronized view of price strength across multiple layers of market action. With the color of the labels and lines determined, this next condition governs when and how vertical lines appear on the chart. By using the modulus operator, which is shown as a percentage symbol, it checks if the number of seconds since 9 a.m. divides evenly into specific intervals. For the 5-minute time frame, it triggers every 300 seconds, marking exact 5-minute windows. The color reflects the candle's direction, green for bullish, red for bearish. This logic repeats with larger time gaps for each additional period, creating a layered timeline of market momentum. The same bullish versus bearish logic is applied to color-coded labels, giving an instant snapshot of each time frame's status. If the 5-minute candle is bullish, its label appears green. If bearish, it turns red. This rule is mirrored across all 5 of the time frames, allowing traders to assess alignment at a glance without scanning any of the other chart time frames. The multiple time alignment indicator offers a clear and efficient way to visualize trend consistency across 5 essential intraday periods. By comparing the direction of each candle, it helps identify potential reversals, confirm ongoing momentum, and fine-tune trade timing with precision across multiple time frames.
Every trader knows that timing and information are everything. Being able to see, at a glance, what's happening across multiple time frames isn't just helpful, it can be the difference between success and failure. The multi-time alignment indicator puts that power right in front of you. No flipping through charts, no second-guessing, just instant clarity on where the crowd is trading and how momentum is building across the market. Let's see what Nigel has in store for us next as we dive into another powerful tool trusted by professional traders.
The market magnet is a powerful charting tool designed to reveal the unseen gravitational forces of price and volume in real time. Each label displayed here highlights a key price level calculated from live volume data, giving traders an instant visual on where the market is most likely to react. The green 50% peak label shows the price of the value zone high by determining half of the day's volume and marks the price of a potential resistance or breakout level. There are green arrows on the chart clearly pointing down from this level. To the right of the peak label, the red 50% trough label marks the price of the low of the value zone, showing a possible support or breakdown level. Red arrows point up from the trough level, helping traders visualize this price level. At the center is the magnet, a magenta label that shows the exact price where the most volume has traded so far today, making it a powerful pivot point. The horizontal magenta line on the chart represents the magnet level, helping to visualize where price action may return and can be considered a support or resistance level. The green high band label captures the highest price reached during the current volume profile, giving traders the high boundary for range-based strategies. Shown here in green at the top of the chart and is often regarded as a resistant or breakout level. At the bottom, the low band label in red marks the lowest traded price in the volume profile range. Shown here in red at the bottom of the chart and is often regarded as a support or breakdown level. Moving horizontal blue bars mark the volume at specific prices around the magnet. When the bars are moving above the magnet, it can mean a future upward movement in price. If the bars moving below the magnet, it can mean a future downward movement in price. When calculating for the market magnet, we begin with the magnet. It is the price level with the highest average volume traded. Next, we calculate the range, which represents the key price levels where 50% of the total trading volume has occurred. To find this, we first sum up all the volume at different price levels, which gives us the total volume. Then, we determine the threshold by taking 50% of this total. Starting from the magnet, we expand outward, adding price levels until the cumulative volume reaches the threshold. These price levels define the range. The presence bars represent how volume is distributed across different price levels. For each candlestick in the session, volume is allocated to price levels that overlap with the candlestick's range. If a price level falls within a candlestick's high and low, it receives a proportional share of that candlestick's volume. This creates a histogram that visually represents where traders have been most active. The 50% peak, also known as the value high, is the highest price level within the range, where significant volume has accumulated. It is determined by averaging the high and low of each price level in the range and selecting the highest one. Similarly, the 50% trough or value low is the lowest price level within the range. It is calculated the same way by averaging the high and low of each price level in the range and selecting the lowest one. The market magnet with its magnet range, presence bars, 50% peak and 50% trough creates a powerful visualization of market activity, helping traders identify key price zones where the most volume has been exchanged.
The power of the market magnet should never be underestimated as it uses a center point as a dynamic force, reacting to volume bands above and below it. When the bands rise above the magnet, it suggests the magnet and price may be pulled upward. When the bands shift below, it signals a downward gravitational pull. This kind of real-time insight into directional bias gives traders an incredible edge, helping confirm momentum before a position is taken. Combined with other indicators, it becomes a powerful decision-making tool for any serious trader. Let's turn it back to Nigel to unveil the next remarkable tool in the trader's arsenal.
The buy-sell oscillator is a refined tool tailored to boost efficiency and precision in day trading for both novice and expert traders alike. This indicator is crafted to deliver instant detailed analysis of market momentum, providing traders with essential insights to gauge market trends swiftly. With clear momentum indicators, the buy-sell oscillator graphically represents a strong possibility of a reversal of buying and selling momentum through vivid green and red arrows. The oscillator calculates its data on a 7-period increment using the relative strength index as the momentum crosses key levels. Green arrows signal strong buying momentum when the buy-sell oscillator value dips below 40, while red arrows indicate strong selling momentum when the buy-sell oscillator exceeds 60. Both arrows will alert you as the candle is still open and moving on your chart, allowing you time to enter or exit a trade before the candle closes. With visual signals, traders can immediately discern possible shifts in buying or selling pressure, allowing for rapid decision-making critical in successful short-term trading. A dynamic feature of this groundbreaking trading tool allows the experienced trader to adjust the length of the levels that the indicator uses to calculate the buying and selling pressure, along with the color of the arrows signifying the potential reversal. The buy-sell oscillator is designed to take the guesswork out of trading by dynamically representing the interplay of buying and selling momentum directly on the price chart. The buy-sell oscillator uses the following calculations. First, determine gain which is equal to the absolute difference between the current and previous close price of the candle on the chart time increment you are using. Then, determine loss which is equal to the absolute difference between the previous and current close price of the candle on the chart time increment you are using. Next, calculate momentum strength, which equals average gain divided by average loss, or is equal to 100 if average loss equals 0. Finally, the buy-sell oscillator value is calculated by taking 100 and subtracting the result of 100 divided by the sum of 1 and the momentum strength. This mathematical formula assures that the buy-sell oscillator is a valuable indicator for any trader who wants to capitalize on short-term trend or momentum price movements.
Much like the pistons of a finely tuned engine, the buy-sell oscillator gives traders a real-time view of momentum firing under the hood of the market. Each upward thrust signals a surge in buying pressure, each downward motion, a pull of selling weight. Watching these precise rises and falls offers a striking parallel to how this indicator helps traders anticipate price direction with remarkable accuracy. When used correctly, it's not just data, it's power in motion. And now, to introduce our final and perhaps most critical indicator, let's turn it over once more to Nigel Ashcroft.
The MACD directional surge with alerts is built to track momentum strength and directional changes within price action. It uses the proven method of comparing fast and slow-moving averages to reveal when market momentum is shifting. Arrows appear directly on the chart, marking moments when the strength of buyers or sellers has changed. These signals provide visual confirmation that a potential trend reversal or continuation is underway. A down arrow represents bearish momentum taking control, signaling an opportunity to enter a short position or exit a long position. An up arrow represents bullish momentum taking control, signaling an opportunity to enter a long position or exit a short position. Each signal is created when the MACD value crosses above or below 0 and confirms a shift in directional strength. Settings for this indicator can be easily accessed by selecting the gear wheel on the chart. This opens the customization menu, allowing full control over the display of signals and indicator preferences. Traders can adjust the style, size, and color of the signal arrows to fit any charting theme. Alert sounds can also be modified by opening the Alerts tab. When signal conditions are met, these sounds provide instant auditory confirmation of a shift in momentum, reinforcing the visual cues on the screen. This indicator uses exponential moving averages to separate short-term price action from long-term price trends. By measuring the difference between these averages and smoothing the result, the calculation identifies true momentum strength while filtering out minor fluctuations. This approach helps traders avoid hesitation, focus on meaningful market movement, and respond to price direction with greater clarity. The MACD directional surge with alerts is designed to simplify decision-making in fast-moving markets. It delivers clear signals, customizable alerts, and a trusted momentum calculation built to improve timing and increase trading confidence.
The MACD directional indicator has been reimagined by the $1 Million Margin Club for today's fast-paced traders. By incorporating the 9 EMA instead of the traditional settings, this enhanced version identifies short-term trend reversals with lightning speed, perfect for scalpers and momentum hunters. With dynamic arrows that signal when to go long or short, it acts like a real-time coach through every market shift. When seconds matter, this MACD isn't just responsive, it's razor-sharp. These tools give you instant insight into price action. Spot buyer-seller pressure in real time with the Scalping Indicator. Feel momentum shifts as they happen with the Market Magnet. Catch early reversals with the Sell Oscillator. Ride trend changes with the MACD Directional. And see what other traders are doing with the multi-time alignment. Used together on one chart, these tools can help you predict the future and tell you when to buy and when to sell. As shown on the chart, once all 5 forces align, your trade confirmations are over 90% accurate, so professional traders don't guess, they profit. These are the same tools the pros use to beat the market. And now, for the first time, they're available to you. Join our team at the $1 Million Margin Club today. And take advantage of the Pro Bundle that offers a free indicator,